Yo, what's going on, guys? It's your boy Mac the Trader, and welcome back to another video. In this video, I'm going to be breaking down a 12% floating AUDUSD trade setup. It's really two different trades, right? But we had a continuation based off of this trade here, so we're going to be breaking down both of them. This position here was taken this morning during New York session, and everyone a part of my Telegram community, first link in the description, was able to catch this move based on the daily analysis that is released every single day. If you are not a part of this YouTube channel, feel free, hit the subscribe button, join the YouTube family. I would love to have you a part, and come and learn how to properly invest your money into the currency markets. With that being said, let's hit a quick intro and then we're going to hop right into the video. Alright, so before we get into the breakdown of this video, I wanted to show you guys the actual position that was taken. So here you guys can see this is a screenshot of my Instagram story. If you're not following me on Instagram, feel free to follow me at TrillionaireMac. Alright, let me know that you're from YouTube and I will give you a follow back. So this is the position taken here. Alright, now I did take this off of the M15 time frame. If you guys are utilizing the information that was given freely on YouTube, right, you should be able to know why this position was taken. But if you don't know why this position was taken, no worries, because we're going to break it down in this video. I also have a couple of tips for you guys throughout the video on how you can improve your trading and how you can become and stay a funded trader, right? This position here, we're looking for take profit around 5%. 5% with a $100,000 funded account would be $5,000 payout for you, just applying simple rules and very simple concepts within the currency markets. All right, so now let's go ahead and X out of this. Feel free to follow me on Instagram if you would like. All right, and feel free to subscribe to the YouTube channel. Hit that bell notification icon to be updated whenever I upload a new video. All right, so this first trade here was taken based off of the H1 time frame. Both of these trades were taken during New York session. New York session is the session of choice, as well as London session is also my session of choice that I trade within the currency markets, right? So this trade here, all right, very simple and very straightforward, all right? So here we can see that we have a sweep of liquidity to the upside, right? We're looking for possible continuations to go long. However, as we can see, price pushes to the downside and we break this structure with wicks, showing us that price wants to possibly continue pushing to the downside and reach further, right? Then we can see price retraced back into our point of interest here, right? If you don't know how to select your points of interest, feel free to join the Telegram community, first link in the description. We have over 3,000 traders within that community, and everyone within the Telegram community has access to my strategy guide, where I basically break down my entire strategy from A to Z and give you guys, at the very end of the strategy guide, I give you guys a checklist on exactly what I look for within the market before I take a position. Not only will you gain access to the strategy guide, but you also gain access to my daily analysis, which is super helpful, especially for those new traders looking to get their feet wet within the currency markets. So once price returned back into our H1 point of interest, instead of taking a risk entry on the H1 time frame, I actually went down to the lower time frame in this case in order to look for a possible lower time frame entry. All right. Now you could have definitely just taken a risk entry here. I do take risk entries throughout the week, but however, this week we have some major Fed news releasing on Wednesday, and I want to be on the safe side of the market than to be on the dangerous side. So looking for lower time frame transitions and lower time frame entries are going to be very helpful when you are trying to minimize your risk as much as possible and maximize your gains. So let's go ahead and go down to lower time frame within this area and let's see how price reacted to this H1 point of interest. All right, so on the lower time frame, we can see that price trades into our higher time frame H1 point of interest, which is here. All right, we can see that the market gives us a sweep of liquidity here, and then pushes to the downside, and we get a change of character right here within this area, price breaking structure to the downside, right? On the M5 time frame, we see that we have an order block here, a bearish order block, and we also have inefficient pricing that was offered here as well. price trades back into our point of interest on the lower time frame and tags us into the market during New York session on Monday at 10:45 a.m. Now in this case here, we risked around 7.5 pips on this trade, and this is the difference between taking a risk entry on the higher time frame and taking a confirmation entry on the lower time frame. So as we can see here, if we were taking a risk entry, we would have had to risk 17.5 pips, and that decreases our return from 7.13% return on investment to about 2.68% return. So when you're looking to maximize your return, okay, you definitely want to utilize my confirmation entries that are given to you guys freely within the Telegram community, right? Definitely want to take advantage of that, especially if you are a new trader. Now, if you already trade the markets, you already have a strategy, this video is not for you. This video is for those new individuals that are looking to get into the currency markets and looking to get their feet wet when it comes to investing. So if we go back to the H1 time frame, let me show you guys where I told all of my mentorship students I was taking profit, all right, which was right here at this week low. All right, we know that this is a week low because once price pushed to the upside and tapped into our H1 point of interest, we can see that the banks or institutions came into the market to protect whatever position they already had within this area. We know that because on the lower time frame, we had a confirmation entry, and we can see that price respected that confirmation entry by pushing price to the downside. So we were looking to target this week low here, right, for about 53.5 pips. So this was a 7.13% return on investment. And if you are part of the mentorship program, we actually had a webinar right here within this area, all right, and we actually watched price whip to the upside, almost hit stop loss, and then we watched the price actually push to the downside, right? Now, those of you all within the Telegram community, all right, the daily analysis that I released for you guys, I told you guys that I would be looking for continuation shorts, all right, and I would be looking for price to continue running into this week low here. I released that daily analysis somewhere around this area right here. So everyone within the Telegram community had plenty of time to utilize the concepts within the strategy guide and look for a continuation pattern to go short. Now we're going to move into today's trade.
Do you want to make money on autopilot? Do you want to increase your income? Do you want to learn how to trade? Do you want to understand the market? Do you want to make money when the market is up and when the market is down? If this is you, all you have to do is click the link below and Mac will contact you.
So today's trade was taken off of the M15. That's usually the time frame that I use as my macro when it comes to day trading. So if we go to the M15 time frame, all right, we can see that we have this simple continuation pattern right here within this area. Now, there are three confluences that I look for when it comes to taking continuation trades. One confirmation or confluence that I use is a previous mitigation of some type of supply or demand. We can see that price trades into this inside bar right here, which shows me that there is a previous mitigation. So price pushed to the upside in order to mitigate any type of supply within this region that wasn't previously mitigated. We also see that we have inducement in the form of these relatively equal highs with these wicks here. We have a small wick here, and we have a small wick here with these candlesticks. Once price mitigated that area, all right, my second confluence is that sweep of liquidity. All right, you could use that sweep of liquidity here, or you could use the sweep of liquidity here, which I used. After that, I then look for imbalance within the market and a break of structure. All right, so here we can see that we have imbalance, right? And we also have our break of structure, which is already marked out for you guys right here within this area. So this morning during New York session, it was very simple. I was just looking for price to return back into this M15 point of interest here that was responsible for sweeping liquidity, giving me a previous mitigation, and also pushing price to the downside, giving me that break of structure with imbalance included. The reason why I don't just trade from order blocks is because, as we can see, this here is not an order block candle. This is a bearish candle that is followed by a bearish move. An order block is the opposite candle of the move or continuation. Therefore, this candle here, would be our order block, right? Now, there are times where traders will contact me and say, hey, Mac, I took an order block trade and price tagged me out. The reason why price is tagging you out is because you aren't looking for institutional points of interest, right? You're simply just looking for order blocks and inefficient pricing. But when it comes to trading currency, that is not going to be enough. So join the Telegram community, gain access to my strategy guide, and utilize that information in order to take these simple trades that take place on a daily basis on all currency assets. We can see that after price broke structure to the downside, all right, we then pushed to the upside, and around 7:45 a.m. we were tagged into this trade here. We also had another opportunity around 8:30 in case you had missed the original entry. But when it comes to my trading strategy, I set limits, all right? I set trading limits. So sell limit, buy limits, that's all. We want price to retrace to a certain level before we take a sell position, and we want price to retrace to a certain level before we take a buy position. Trading with limits is going to make it very, very easy for you to not only take advantage of the market, but also understand that if price is not returned back to this area, then there's no point in me being in the trade. So I get that question all the time, and I hope that helps you guys out for sure. All right. Now, as it relates to this target, looking left, we don't quite have anything to the left, right? As it relates to day trading timeframes. We do have this low right here, right? This is where I went risk-free on the trade since we had taken out this structure. So I simply just closed 1R of my position. But whenever I am day trading, if I do not have a previous point of interest, then what I will do is I will simply just target 5R my risk. So since in this case, since we have a 10 pips stop loss, right, for this M15 trade here, I'm simply just targeting 50 pips, and I'm looking for price to give me a continuation push to the downside. Right now, it looks like we're doing a little bit of accumulation, but as long as we maintain market structure, we are good to go ahead and set our target for 5R, right? As you guys could see in the screenshot previously, I am still in this trade, and I'm looking for 50 pips to be hit around 0.66373. That'll be about 50 pips, 5% return on investment, plus this 7.13% return on investment. Using the information within the Telegram community, this would have been a 12% week for you, right? And it's only Tuesday. So for any new trader out there, if you need assistance, if you need a proven strategy and a mentor who uses that strategy on a day-to-day basis, join in on the Telegram and take advantage today. The Telegram community is full of traders that have been trading for years, and also traders that have only been trading for a couple of weeks to a couple of months. And within the Telegram community, once those traders go through the strategy guide, we are seeing some phenomenal results with the trades that you guys are not only able to produce from watching my daily analysis and taking advantage of my setups, but also you guys are able to spot these trades within the market with ease during New York session and during London session, and you guys are maintaining your funding accounts. You guys are passing these funding challenges and making weekly withdrawals, which is absolutely phenomenal. Super proud of everyone that's been taking advantage, and there's more to come. If you enjoyed this video, feel free to leave a like on it. If you guys do have any questions, drop them in the comments down below, and I will get to them as soon as possible. If you'd like to have access to my entire institutional trading course, feel free to join the mentorship program where we do weekly webinars and we do one-on-one sessions. You guys gain access to all of my recorded content and all of my trading courses as well. With that being said, I'll catch you guys on the next YouTube video. Much love and peace out.